It's after 1, so we'll open the meeting. Just confirming the meeting is live streamed, and if I could ask people to turn off their phones, their mobile phones. If I could invite the Mayor to do the opening karakia.
Thank you very much, Chair. Tūtaua mai I runga, tūtaua mai I raro, tūtaua mai I roto, tūtaua mai I waho. Kia tau ai te mauritu, te mauri ora ki te katoa, haumi e, hui e, tae ki e.
Okay, thank you. So at this point, I'd just like to welcome our new member, Stuart Henderson, who's joined the committee. So Stuart, just maybe hand over to yourself to a brief intro, and then just make sure get the other members to introduce themselves to you before we launch into the business.
So green. That's terrible. You get to hear me in quadraphonic. Ena mana, e nā reo, e rao rangatira ma, nā mihi, manahau, kia kato. No Rotorua, aho. E noho, ana, kia, pakeri. Ko, Stuart Henderson, aho. And thank you very much. Firstly, I appreciate your choosing me to be your Deputy Chair. It's an honour, and one that I hope that I can provide Rotorua Lakes with my assistance for the next triennial. Or I think it's possibly a little less than that now. It's 2 more years to run. So I have been in financial markets risk and economic risk management for nigh on 35 years. And I was, up until 2 years ago, a partner at PwC in that whole area of risk management, very much focusing around treasury. So coming to council with the new government and a new look in terms of what everybody's going to be thinking to do and their plans, and I hope I can be of assistance to you all. Kia ora.
Kia ora, thanks, Stuart. So just in terms of intros, have you met everybody on the committee or no? Names are there, so obviously, but maybe just a quick intro from each council in terms of their role. That's okay. Councillor Barker.
Kia ora, my name's Karen Barker. I'm the Rural Ward Councillor, and I'm also the Chair of the Infrastructure and Environment Committee. Thank you.
Kia ora.
Councillor Greg Brown. I feel like I'm on all the committees, including this one. Deputy Co-Chair for the Community District and Development Committee.
Kia ora, me Tania Tepsel. Also want to acknowledge we have our Councillor Conan O'Brien here observing as well, just over there.
Kia ora, we bumped into each other earlier. My name's Fisher Wang. I'm a Councillor and Deputy Chair of the Infrastructure and Environment Committee.
Kia ora, Stuart Sandra Kaifong, Deputy Mayor and also Chair of the Community and District Development Committee.
Okay, thanks councillors, thanks Stuart, welcome. Okay, so just moving through the agenda, just firstly apologies, just calling for apologies. Do we have any apologies? Okay.
Councillor Warren is waiting for the link to get in online.
Okay, so note Councillor Wairi for lateness perhaps.
I think he's waiting to be admitted or something. Sorry? Oh.
Okay, so we'll just note him for
apologies
then,
perhaps if the staff could just get the link going for him.
Okay, thanks staff for looking at that, thank you. Just declarations of interest, that's been circulated separately. Just noting, is there any changes or anything to update with respect to that document? If not, we can move on. And just, are there any urgent items for the agenda? I'm not seeing that there are any. So moving to 5.1, so I'm just asked for a mover and a seconder that the minutes of the Audit and Risk Committee meeting held on 20 September 2023 be confirmed as a true and correct record. Mover, Councillor Barker. Seconder, Councillor Brown. Thank you. All those in favour, please say aye. Aye. We'll take that as confirmed. Okay, committee, if we could just move to the next item, which is item 6, which is Treasury Risk Management. And we have Alex Wundergen from PwC with us. And Thomas, you'll briefly introduce that for us. Thank you.
Thank you, Chair, and good afternoon, councillors. So to my left is Alex Wundergen. He is a partner at PwC, and PwC has been our Treasury advisors for quite a number of years now, and we meet quite regularly and obviously seek their advice with regards to all functions of Treasury. And so with that, I'm just happy to hand over to Alex, introduce himself and take him through your presentation.
Thanks, Thomas.
Thank you for having me here today. So, kia ora everyone. Just had the introduction. Look, Alex Wundergen, partner at PwC's Corporate Treasury Advisory team based in Auckland, but thank you very much for having me here today on such a wonderful day, and it's an amazing kind of walkthrough into the building here as well. I've sat in a few council chambers. I don't know if I sat in one quite like this, so it's very special. So look, today I'm just give you a little bit of an update in terms of a couple of things, what's going on in the world and maybe what we're doing about it, or what we're at least discussing and recommending around that. So Thomas and David and myself meet regularly and frequently to discuss what is happening in the world of financial markets and economics, and yes, I have worked with your Deputy Chair for a large number of years, so he'll have some wisdom and comments, no doubt, for me. So look, I'm hoping this is going to work, and it is, that's great. So look, I think where I was going to start with today, and I think I've got 20, 30 minutes, something?
Yeah, we've allowed 30. Are you happy to have sort of questions as we go through? That's okay, so it's interactive? Cool, thanks Alex.
Love to, that'd be great. And so look, I think initially sort of set the scene, what's going on in the world, and quite a bit going on in the world, albeit I'll probably try to focus that on economic and financial market events. And then the council response to that, so in terms of the policy framework that helps supports the management of that, and touching base on, I guess, a couple of those kind of key areas, so the interest rate risk, the funding and liquidity risk management, update briefly on the local government funding agency, of which you are a member, and the Fitch credit rating agency as well, in terms of their overview of your credit standing and profile. I'll wrap that up, but as the Chair has pointed out, I'm more than happy to take questions along the way also. So in terms of financial market movements, unprecedented change is probably the way to discuss this. So look, I appreciate there's quite a lot of lines and bars on this. I'll try to explain this as simply as I can. Interest rates have moved a long way in a very short space of time. That's probably no surprise to anybody in this room here. We're all feeling it fairly acutely. But never before have we seen interest rates increase at the pace that they have over the last 24 months. And so what we have on this chart here is in fact just the change over the last 12 months, or in fact slightly less, and it is very significant, and it's particularly significant in terms of the rise of shorter term interest rates. So 3M, you can read on that chart as being the floating interest rate, having moved a long way higher in a short space of time. And this is coinciding with the Reserve Bank looking to achieve their policy mandate, which is to control inflation and keep that between 1% and 3%, which it presently is not. It's off its highs of 7.3% down to 5.6%, but 5.6% is not between 1% and 3%, and hence interest rates remain high and elevated. And they remain elevated the world over. We're not facing something that is ours to face alone, and interest rate pressures and inflation pressures are evident globally, and interest rates have synchronised kind of movements high over the last 24 months, albeit pleasingly we are starting to see some signs that the peak has occurred. We have seen the peak of interest rates, inflation has peaked, the movement from here is lower. The key question within that is at what pace and what time frame do those interest rates lower? And that may be a slower journey than what we might like for, but necessary given inflation is still not where it needs to be. So significant uplift in a short space of time, but signs are that things are moving in a more positive direction and lowering our borrowing cost. And this will show you some of that change in movement. So again, this is some of the volatility that we see in interest rates. So they don't move in a straight line, and over the course of this year, significant ups and downs.
It's kia ora, the Councillor Wara who's joined us, I think, yeah? Kia ora.
Perfect. But what you can see in the...
the ghost in the background. Kia ora.
What you can see on the far right of that chart is they have actually moved lower recently, which is pleasing. And that is coming about as there is renewed kind of confidence that inflation has peaked and it will come back to levels that are akin with something aligned with policy targets the world over. So that is momentum that we are seeing. But as you can see, it is not a straight line. And so a number of the discussions that we are having with your management team here on a regular basis is looking to seek and find those opportunities where we are seeing more favourable movements lower to participate in those, given you do have a fairly extensive borrowing program ahead of you. You have a significant amount of borrowing on your balance sheet presently. This represents a significant interest cost and expense to you. It is important and prudent to be managing that effectively and on an ongoing basis. Next page. Here we are. The other contributor to your borrowing cost is the funding margin that the local government funding agency provides to you. So they are by far and away your most effective and efficient borrowing partner. You do have bank funding that you utilise as well, albeit that really does support more working capital type movements, given the cost of that borrowing is higher. The local government funding agency provides to you certainty, it provides you term and tenor in order to borrow at a time and time periods that align with the nature of the assets that you're financing, which are long dated, and to do so at a leverage of the credit standing and profile of the LGFA, which is equivalent to government risk. So the LGFA is your primary borrowing mechanism, as it is for the local government sector. So 90% of all borrowing goes through the local government funding agency. Some small exceptions to that, notably Auckland Council with their own fairly significant borrowing program, but for the most part, it is local government funding agency. And again, what we've seen here recently is a movement higher in terms of some of those spreads and margins that you're paying, and that is reflecting investor appetite on risk and suggesting that there is a little more risk in the world at the moment, and they want a slightly higher premium for lending and investing to the LGFA. But again, pleasingly, the very far right hand of that chart will show that those are starting to come back down as well. So the two components of your borrowing are both moving in tandem, lower presently, which is positive. So what are we doing about that is the key question. And look, the kind of overriding governance document here is one that you approve, your liability management and investment policies, which are jointly known as your Treasury Management Policy or Treasury Risk Management Policy. And essentially this seeks to put in place a proactive framework in terms of the management of those risks, and namely your interest rate risk and your funding and liquidity risk management there as well. So helping to support your plans, budgets, policies, and provide you certainty. You're not an organisation, and look, obviously you set the risk tolerance and limit here, but if I could generalise, I would say you're not one that likes to take risks, and you need certainty for your ratepayers, and in terms of the support of intergenerational equity, known costs and outcomes are sought. That policy is regularly reviewed to continue to ensure that it is fit for purpose and managing and mitigating the risk that you are facing. That review is presently underway, and there will be feedback for you on that shortly. And I would say that over this last 24-month period, where we have seen unprecedented increase in interest rate levels, your policy has performed extremely well in terms of insulating a significant majority of that interest rate uplift in terms of those rates and levels. Were your policy and interest rate fixing position to have been such that you had a significant exposure to floating interest rate risk, interest costs would have been much, much higher than what it is today. But you do have a basis where you have interest rate fixing requirements such that you have a high degree of certainty in terms of what your costs are. And that has protected and mitigated against some of that uplift that we have seen. The policy also speaks to some of your financial ratios and limits. These do match to a large extent those imposed by the local government funding agency in terms of the key covenants that they are providing. And notably, one there that does get discussed reasonably frequently across the sector is the net debt to revenue ratio, which is commonly seen as a cap in terms of the leverage capacity of the sector, but also looks to align with maintaining your credit standing and profile with Fitch rating agency as well. So in terms of that proactive interest rate risk management, we're very well aware that you are managers of long-term intergenerational assets and investments, and the approach to managing that interest rate risk seeks to align with that. So we're not trading here, we're looking to provide certainty over that longer term horizon, and certainly where we do see the greatest degree of volatility is in that very shorter term interest rates and that floating rate risk in the movement of floating rates moving materially, as we might see this Wednesday when the Reserve Bank meets, albeit we don't think there'll be any change and the OCR will stay at 5.5%. But you do use tools in order to provide that certainty, and namely the primary tool that you have been utilising in order to manage your interest rate risk is borrowing on a fixed term basis. So borrowing for a set period on a fixed interest rate to give a known outcome in terms of what that borrowing cost and rate is. Very conscious as well, however, that there are different scenarios around what your debt level might be, depending on what you seek to undertake in your long-term planning process and what that might entail in terms of that proactive risk management. And there's in all those scenarios there, and there is what we would call a main debt forecast or expectation. There are scenarios where debt is higher or lower than that, and these are sensitivity tests, and so sort of arbitrary up and down from a main debt forecast here.
So Alex, can I just ask, these numbers, and maybe Thomas answers this, that's reflecting of where LTP discussions are to date, and presumably they're being updated as the LTP process evolves?
These figures don't represent the information that was tabled last week, and will be updated in the next redo. So what Alex is showing you is based on our current annual plan and what's left of our previous LTP.
Right, so, okay, as you go through the LTP process, you'll obviously be updating this as the capital program changes, yeah?
Yep, so the intention will be, as we get close to finalising the consultation document at the end of January, that position of the draft LTP will be provided to Alex and his team and loaded into this. Yes.
Yep. Thank you.
So the purpose of this is really to illustrate that we are talking very regularly, and as new information and changes come to light, that we do reflect that in terms of our ongoing monitoring and proactive action that we're taking around interest rate risk management, and we do sensitise that to ensure that we are taking account of potential scenarios where debt may be higher or lower and what those impacts might look like as well in terms of some of the decisions that we're considering. And as you can see here, these are your previous long-term plans and the forecast of where those debt levels would be, could have been. And as you can see, there's a reasonable degree of variation there. And I appreciate 6-8 years is a long period of time, but if you had to look at the bottom line there, where in 2015 the expectation where debt might have been at this point in time to where it is today, those are quite significant delta. And again, this is really just reinforcing that message. I hope I'm not harping on about this, that we're constantly discussing what those levels are and looking to take proactive action because new information comes to light and changes, and we need to react to that as well. But as you can still see there's a fairly significant uplift in the gradient of debt and borrowing there also, which obviously highlights and increases the risk and importance of proactive management of some of these costs.
Thank you, Mr. Chair, through you. Thank you very much. Just a question on this one, because I know that in the wider councillor group, it has been raised through our workshops, etc., on just if there was anything that we could have done to preempt that the previous forecast was, well, when we look at between 2015 to what it is now, just completely, entirely different. I know it is a struggle that other councils across the country are facing, but could there have been any way where we could have been more proactive in changing the debt forecasting, which may have influenced decision making previously?
One thing that we do often and frequently say is to speak frequently and regularly to your asset managers and your infrastructure teams and understand where particularly some of the significant capital items might be coming from and the likelihood of those occurring, the timeliness of those occurring, and we have situations where local authorities will put those teams essentially sitting next to each other so that they do talk and speak frequently to get that uplift. You've also highlighted that this is most certainly a sector-wide consideration, and I could put probably this chart up for almost any council across the country as well. The rating agencies acknowledge this in their own ratings basis as well, and they take a arbitrary haircut to the debt forecasts that are provided to them on the basis of what they've seen historically, which is an under-delivery to those capital programs and what that debt level would have implied. And so this is fairly well acknowledged that it doesn't often pan out the way that's anticipated to. But what I would probably point out, particularly in this graph and chart, is the 2021 forecast, and the actual line is in fact following that very closely to forecast. So that would suggest to me that there is some very close alignment at the moment than maybe what you might have seen previously, which I would take as being quite encouraging.
Any other questions? Thanks, Alex. Yeah.
Hopefully this isn't too confusing. This is the key kind of parameters that we discuss in terms of the management of interest rate risk. And these are charts and tools that Thomas and David and myself speak to and discuss frequently. And essentially here what we are looking to achieve and meet is your policy parameters, which are on the left-hand side of the page, where you have a requirement to have a minimum level of interest rate fixing, and you have a capacity to have a maximum level of interest rate fixing, and those decline over time. So in the near term, where we have greater certainty over what our debt levels are that we're managing to, and where we have, hopefully, greater certainty over where interest rate levels are, where they're going to be, there's a greater capacity to fix and attain some certainty around those. Over time, that diminishes. We have diminished certainty over what our debt level will actually be, as we saw from the chart before. We have diminished level of knowledge or expectation around where interest rates are going to be. We've seen that over the last 2 years. Nobody thought interest rates would be this high. Not even the US Federal Reserve, who contain the sharpest economic brains and minds in the world. And so there is a capacity for you to hedge here and to undertake interest rate fixing to provide certainty, and it is to keep that within a corridor of certainty. And so those two black lines on the chart, we are looking to make sure that we have the shaded area between those, which you are. So you're completely compliant with your policy limits and parameters. Your present level of interest rate fixing is 86%, which is very high on a relative basis to your peers, which has insulated you to a significant extent from the uplift in interest rates that we've seen. Not completely. There's 14% that is exposed to the floating interest rate movement, but that number remains reasonably elevated for a forward period there as well. Your average term of your fixing at the moment is just over 4 years, and just under 4%. The equivalent 4-year rate today is close to 1% higher than that. So you're borrowing at close to 1% below where the current market would be if you were to re-enter the same profile and position.
Question from Councillor Brown.
Who sets the policy? What's the process for setting the policy and the ranges? And how do we benchmark that? Like, we're obviously operating inside our own range, but what's an appropriate benchmark for measuring your achievements?
Yeah. So the policy parameters in conjunction with recommendations from ourselves, peer benchmarking in terms of what other local authorities, not just domestically but internationally, are using in terms of best practice management of controlling and managing interest costs. And within that, there is a policy benchmark in terms of the performance benchmark. So there is a situation here where we could have undertaken a neutral position at all times to look to position directly within the midpoint. You can see that there's discretion there to be between a minimum and a maximum, and so there has to be there's an active decision-making process that goes on around where to be. The policy does contain a benchmark as well in terms of where are we currently placed relative to what a neutral position would have undertaken should we have undertook that, and that is contained within the document, which you'll soon get a chance to review and see that policy document as well.
So I think earlier in the meeting you did say that the policy is currently under review, so I'd expect at some point in time that would come back here. But, you know, key piece of advice is the strategic advice that PwC give with respect to what's appropriate for the sector, etc. So that's the guidance that we can take in terms of that we've got an appropriate, prudent policy that's in place.
Yeah, that's right. Another important part of the management of your treasury risk is around your funding risk management. So this is the physical borrowing that you're undertaking, which is primarily through the RGFA. And the aim here essentially is to make sure that we are spreading and smoothing some of those risks. We don't have significant amounts of debt refinancings at any one point in time that would expose us to whatever the prevailing market conditions are at that point. We want to avoid that situation, and so we do have a spread in terms of your debt maturities. We do look to refinance those early in advance so that we aren't turning up a day or two before that borrowing is due and hoping someone is going to lend it to us. We do proactively manage that to make sure that we've got the funding committed to us well in advance of time and undertake pre-funding strategies to do so. In the near term, do make a utilisation of both short-term drawdowns under your bank facility, which is currently provided by BNZ, or commercial paper issuance through the RGFA, which is another short-term funding mechanism. And that's been an attractive way to lower your borrowing costs. So a mix of long-term committed debt to fund and smooth your interest rate, your repricing risk, and fund those intergenerational assets, but also look to borrow shorter term where to some extent to lower your borrowing costs as well. So a mix across the portfolio of doing that. In general, the borrowing terms and tenors recently have been 7 years or below, and namely from one of those charts I put up earlier, which was a sharp uplift in the borrowing cost beyond 7 years, so looking to avoid that uplift. Again, this is something that we're constantly discussing in terms of any upcoming borrowing maturities or refinancings that are impending, as well as the liquidity requirements. So this is the short-term access to funds to continue operations. And there's two measures that you utilise within that and reasons why you do that. One very important one is it is a covenant under the RGFA's requirement that you must maintain a buffer amount of 10% over and above what your currently drawn external debt balance is. So if your external debt balance was 100 million, you must have 10 million either available to you from a committed bank facility or cash equivalents of those nature in order to meet unexpected outgoings and commitments. And so you can presently meet those ratios, and you do so via a combination of short-term cash, but also importantly, your BNZ banking facility, which provides you a capacity to utilise if you need to, but not an obligation to do so. So think of it as an insurance premium.
Stuart.
Through the chair. And Alex, you would, I think LGFA also can provide that same facility that a bank can provide in the form of a liquidity committed facility?
They can indeed, yes.
Do you have any, perhaps share how that's being used by other local government?
Absolutely. So the LGFA also recognised a need that they are essentially imposing from their government, that they could provide those similar types of facilities, and they have provided those up to 500 million in total. They've provided across the sector. They have no further capacity beyond that to provide or extend those facilities greater than that. Those have been reasonably attractively priced, but so is your present BNZ facility is equivalently priced. The benefit and flexibility from your particular BNZ facility is the repay and redraw within a single business day's notice, and that really does help with your working capital management. Whereas the LGFA facility, whilst it is there, its primary purpose is to meet that liquidity ratio requirement. They don't expect that to be utilised as a daily drawdown facility, whereas your BNZ facility provides that. So they're equivalently priced, but the BNZ facility presently has more flexibility, and so have persevered with BNZ at this stage. Again, there's a lot of numbers on here. The bars essentially are representing where you have your funding maturities, and those are spread presently over an 8-year horizon. So you have a number of funding maturities, but in any one year, there's a significant amount that needs to be refinanced within the next 12 months. There is, if I can read that correctly, $22 million to be refinanced, and primarily that is at the upcoming maturities of your April 2024 borrowings through the LGFA. And we are currently undertaking ongoing discussions with the team around strategies to refinance that in advance to make sure that those funds are going to be committed to you ahead of the 15th of April 2024. But there is here a spreading and smoothing of those maturities to make sure that you don't have excessive concentrations. You do again have a policy parameter set on the bottom left-hand corner of that page, which you are compliant with. You do again have a liquidity policy where you can see you are meeting that. What you might notice above that there as well is you are exceeding that liquidity ratio presently, but not by a significant extent. Part of that is by design. Carrying excess is a cost. Looking to minimise costs. I think that's an important objective. But that is something that consistently needs to be reviewed, where it needs to be considered to be increased to match your debt forecast. And so again, on those discussions with the team around where debt levels are moving, that will also entail a discussion around what the appropriate buffer amount that needs to be available is as well, conscious of where we are today, which is doing a good job at minimising the excess cost of excess liquidity, but it is not a substantive buffer all the same. Within that though, to be clear, we're talking about a current excess that you're carrying close to $40 million. So it's fairly substantial in terms of what could come out of the woodwork unexpectedly that would mean that you need sudden access to $40 million, but that is a covenant requirement from the LGFA at this point in time.
Mayor Tatzel.
Thank you, Mr. Chair. Through you. Just a question around the liquid assets. I see we have 5.8 million there. So understanding that liquidity is there if we need to meet unexpected costs, we are about to go into an unprecedentedly high rates increase for our community. What sort of assets of council do fall under the liquid assets category?
Cash equivalents, and those are going to be things like very short dated term deposits. And that's presently what that's comprised of. The other 35 is your undrawn bank facilities. So that's your capacity to borrow from the BNZ, but not a requirement to do so. There are key here is a definition of what is liquid. A term deposit that is placed for 6 months is not liquid. It is not available to you for 6 months. So definition under your policy is that that needs to be accessible within a 30-day period in order to classify as being liquid funds. So it is quite short term, but deliberately so in order to match what we believe is best practice treasury management. And if you do have a need for liquid funds, it needs to be that, and a bank term deposit beyond that sort of 30-day period is not. You and I might say it is from a personal perspective, but we wouldn't say that here.
That's fine. Yep. Thanks, Alex.
We do monitor your RGFA covenants, where again you are compliant, and that does model that forward as well in terms of where those are. We can see that there is some closeness to the ratio limits from a treasury policy perspective. So whilst within the RGFA has a borrowing covenant set, your own internal policies are set at a threshold slightly inside that. So think of it as a stage gating. We come to our own policy parameters and limits first before we start breaching our external covenants and limits. You can see on the present forecasts, which are being reviewed and changed, so this might not be where this position ultimately lands. There is some tightness in terms of the net debt to total revenue ratio under your internal treasury policy limit in 2027.
So just to be clear, so that's the graph on the bottom left there. So the policy line is the yellow, is that right? Yeah.
The yellow line is the LGFA limit.
Yep.
So no expectation of a breach of your external covenant limits.
Yep.
But the internal limit that you're setting for yourself under the Treasury Risk Management Project, which is currently being reviewed, is some closest to that.
So the current numbers in the model, which is annual plan plus remaining to deliver on the current LTP, we're basically on the limits. Yep. So effectively that's what that's saying is for the new LTP, there's effectively no headroom within our existing policy to increase the debt levels. Am I reading that right?
Yep, noting that those debt limits and forecasts are currently being reviewed. So this picture that's presented here might not ultimately be the case, but it is something that I think you can see from that chart that there is some closeness to it and something to be considered closely. What we have evidenced across the sector, generally speaking, is there has been a move to align some of those limits. So the internal limits aligning with the LGFA limits. We have seen a move.
Oh, so what I'm hearing you saying is that black dotted line could be reviewed as a policy decision by this council. So is that
correct?
And is that going through the LTP process? I'm looking for Thomas for confirmation on that. Yep. So that is a key council decision to make with respect. Yeah. Okay.
Correct.
Yep. Okay.
So compliant presently.
Through the chair, just numbers-wise, the LGFA line, that's about 280, or which one are you using? Because they have staggered it.
They do, to 285%.
So that's 285% in terms of your revenue. And so to some context, I was at the LTP planning workshop, and what's been discussed was a 250 capacity. So 250 inside the LGFA's 285. There was a report last week from one of the major rating agencies, Standard & Poor's. So if you can say Fitch do about half of the sector, Standard & Poor's credit rate the other half of the sector. Now they've come out with a very interesting forward-looking report about the inclusion of three waters, which is where we are now at in terms of this new government. And they have pretty much made it clear that they see a sector downgrade of about one notch, and that some within the sector will be downgraded by possibly even up to 2 notches, depending on where they are going with that particular ratio. So have you got some thoughts on that in terms of forward guidance for this council? Because in as much as we don't want to make 250 a target, but if it is being modelled, there might be some credit rating consequences on that. It'd be great if you could give an eyes wide open on that, please,
Yeah.
Alex.
Happy to, and that's a nice segue there, Stuart. You are rated by Fitch, not Standard & Poor's. Stuart's correct. There was a report last week by Standard & Poor's that did note that there is a challenge to a couple of perspectives from the changes to the Affordable Waters Reform Program that was currently tabled, which is no longer tabled, namely that the institutional framework of New Zealand was under threat, and that, generally speaking, has provided a significant uplift to our ratings methodology here. And New Zealand councils have rated very highly on that basis. Standard & Poor's essentially came out and said, we think there's some significant risk to that, and we are going to place the majority of the councils that we are rating under a negative watch as a result, and they could get downgraded. You're obviously rated by Fitch, and there's some comments in here which don't feel all that relevant anymore. And the last time that they provided a statement of ratings assessment to you was in March. So this is fairly out of date, but this is what they've last said. And what they've last said is that they believe that under your current rating level, you had a stable outlook and you would remain a AA- rated council. This could obviously change. And in terms of that downside scenario, there's slightly different ratings methodologies that both use. And in particular is a payback ratio that is the key metric for yourselves with Fitch. That could create some downside pressure. And essentially that's around debt serviceability and ability to meet your commitments. And were that to deteriorate further or on a sustained basis, that could see that rating on a downside pressure. We haven't presently modelled that. That is something that we can do and we'll be discussing in terms of what that might look like under your new LTP assumptions alongside that. But certainly the sector as a whole is facing this challenge. So this is sector-wide as a result of the changes to the Affordable Waters program, which we expect to be repealed very shortly.
So Alex, coming with that would be the impact on interest rate margins and assumptions that need to be made in the LTP. So that's sort of a joined up conversation to have to present back to council in terms of the assumption around that.
Yeah, exactly right. So the current rating base that you have, it is AA- council, dictates the borrowing costs through the LGFA to you. So they borrow as a AA+ rated entity, and they add a margin to those borrowers that are below that, which you are, AA-. If you were to get a ratings downgrade, your borrowing cost through the LGFA would increase by 5 basis points. So there would be the difference between borrowing at 5% and 5.05%, which in the scheme of what we've seen recently is not significant, where we have seen the base rate move from 0.25% to 5.75%. So we've seen significant uplift in that sort of move. So 5 basis points is possibly not something that we would be immediately concerned about from an uplift in the borrowing costs, given the volatility we're seeing in some of those wholesale rates, which we've also seen earlier. But it is a statement that you're also providing to the external market around your creditworthiness and ability to service your debts as well. And deterioration in that is something that you'd want to carefully be managing where you can.
Stuart.
Sorry, just through the chair, just to follow on from that, would it be true that they would also impact on LGFA?
Yes. LGFA being the sum of the parts, and so were the whole sector to get a downgrade, that should likely see also LGFA receive a ratings downgrade, meaning that their cost of borrowing when they go to market would increase as well. So you are correct. they would have a higher borrowing cost, which they would look to be passing on at a higher margin to yourselves again. So maybe it's twice the impact.
Okay, but at the end of the day, that's advice, technical advice that you'll provide to Thomas through to council around the key assumptions to make in the 10-year plan, yep?
Correct.
Thank you.
Wrapping that up. You are a proactive manager of these risks. And I think that is really well exemplified and highlighted by the fact that you have 86% of your borrowing on a fixed borrowing basis right now, which is a nice position to be in relative to a number of borrowers. Where there's uncertainty around some of those key inputs, we are talking regularly, very regularly, to make sure that we are updating those and with the latest information, feeding back updated revise and recommendations around that. You have a policy that is currently being reviewed to make sure that it maintains its position as best practice, to regularly capture and monitor the risks that you're facing here. We do regularly. Your current approach is consistent with sector best practice, with industry best practice. You do have some significant debt levels to be managing. We're discussing those closely to make sure that all stakeholders and shareholders are engaged and are feeling like these things are under control.
Hey, thanks, Alex. We've taken some questions. Any other final questions? So I'm taking that we'll see you again at the point that the policy is reviewed. It'll come back to this committee, and obviously through the LTP there'll be discussions around some assumptions that need to be made. If there are no... Oh, Councillor Brown.
Thank you, Mr. Chair, through you. Do we have you for a fixed term? Do we review your performance at a certain point in time, and is it a 10-year, 5-year process? How does that work?
Yeah. Thomas?
We do a 3-year engagement, and it's reviewed at the end of each of those terms. Within the New Zealand market, you have the choice of, I think, not Bancorp, yep, it is Bancorp still, and PwC. When I first started at council, we were using Bancorp, and we changed to PwC, and we've enjoyed the relationship ever since. The big difference between the two from our perspective is probably the global reach, but more so they're much more proactive and get involved on a daily basis with regards to making decisions and providing advice. And we've been extremely pleased with the service from PwC and in particular Alex.
Thanks, Tom. Question from Councillor Waru.
Yeah, kia ora. Just a quick question around the turnaround creation or the review of it. What's the typical turnaround from review or creation
So it is being reviewed at the moment. So at the time of going out for consultation on our LTP, it is a requirement to have this policy approved and adopted. And so we do therefore revise it and seek your approval in adopting the new policy in conjunction with the Forward LTP project.
Okay, thank you.
Mayor Tapsell.
Thank you, Mr. Chair. Through you, my question is just regarding the interest rates. You've mentioned that interest rates have peaked, but you've also highlighted that we do have an extensive borrowing coming up on our program. How do we know that the interest rates have peaked? Because I think when they're at 2% and all of a sudden they're at 4%, everyone's going, oh, geez, it can't get much higher than that. And here we are. So is it going down? Do we expect it will continue to go down? And is that comparable with what we're seeing overseas and overseas markets, in particular the US, which we tend to follow with a bit of a lag?
We do follow the US. We're comfortable that interest rates have peaked, and to say that. I think what we've held and maintained our view in terms of interest rate settings and our forecast and the advice we've been providing to the team through the course of this year. A number of the major banks probably can't say the same thing and have changed a number of times. Why we have conviction over that is we're seeing meaningful declines in inflation. Inflation at 7.3% has declined from that point to 5.6% today. The Reserve Bank expected this to be 6% presently, so on the positive side of the ledger, albeit still not 2, whereas they would really like it. But we are seeing continued kind of momentum lower on that basis as well. We've seen that supported by primarily the pass-through mechanism the Reserve Bank seeks is mortgage rate refixing. So retail borrowers rolling off their 2 and 3% onto was currently a 7%. So the average mortgage rate 2 years ago was 2.75%. Today that number is 5.25%. But if you were to undertake a new mortgage today, it would be 7.25%. So there's still a significant uplift still to come in terms of rolling off some of those lower rates onto higher. The Reserve Bank will be comfortable that they have done enough. 5.5% OCR is as high as it needs to go. There is more interest rate fixing to come. It does have that lagged effect because we like safety and security here. We all fix our mortgage rates. But it takes time, likewise, that if we were to be cutting interest rates, it's going to take time for those to be passed through and for interest rates to move lower to pass through. So we're comfortable. And as it is in the US, so similar undertakings there. Inflation was 9%, it's down at 3%. Unemployment rate moving higher, which is reducing wage price pressure, meaning that the ability to meet cost pass-through is diminishing and inflation is coming back as a result.
Thank you. Just to follow up on that, so given that we do have extensive borrowing, we have significant amount of infrastructure investment in our first year of this LTP, understanding that interest rates are set to potentially decline or certainly not get worse, there's confidence there. Would it be prudent for us or other councils in our position to consider delaying some of those projects until the time that the borrowing, which is very long term, has a more attractive interest rate?
A key decision that we're having a discussion is on what basis do we borrow? Do we borrow on a fixed interest rate basis, which gives us certainty but does lock us into the current interest rate environment, or do we borrow on a floating interest rate basis and enjoy a participation lower as interest rates move down? And that would be a key discussion that we're having on the upcoming basis, where you've got capital plans and projects that need funding. A key discussion that Thomas and myself and others will be having will be, should we borrow this floating in order to participate in this movement lower and not lock us into the high interest rate environment, but still have the borrowing capital committed to us?
Answers your question, Mayor? Cool. Sure.
Through the chair, and this is a bit of a follow-on from the Mayor's question, in that her first question was very much around interest rates, and you covered off very nicely, thanks very much, the short-term interest rates, which is what happens in terms of direction of travel from the Reserve Bank. This council has a propensity to borrow fixed rate, generally long-term, 5-year plus. Yep. So as we know, long-term interest rates, they're influenced by completely different things. Could you perhaps give your feeling as to why you think they've topped out?
Yeah.
And the direction of travel, where for us the fundamental is going to be where are long-term rates going?
Apologies, I probably didn't answer that completely. So you're correct. Long-term interest rate settings here in New Zealand are not about what the Reserve Bank is doing. Where we set the OCR has an impact on our interest rate levels, generally speaking, out to about 3 years. Beyond that, we're an international market. New Zealand is a net importer of capital. We don't self-fund here. We need to attract overseas investment. In order to do that, we need to offer them a rate of return and a yield that's commensurate with where they could obtain that somewhere else. So the primary benchmark and driver of our long-term interest rate settings is the biggest and most deepest global economy in the world, which is the US. And so where the US sets their interest rates, that is our benchmark. So where they have confidence that their interest rate peaks and they are moving lower, that will flow through into our interest rate settings, and they will also be lower in terms of those long-term. The US are seeing similar dynamics that we are seeing here. They're seeing their unemployment rate move higher. They are seeing growth levels sustain at a basis that is not driving inflation higher, They are seeing inflation that has moderated from 9% to 3%. So that has moved a substantive way in a short space of time. They have members of the Federal Market Reserve who set those prices and interest rate settings, suggesting that they have done enough. And this is giving the market confidence to price in cuts to interest rates from next year, flowing through into those long-term rates coming down and ours flowing suit as well. So we've got confidence that we've got similar market dynamics in the moment that inflation has peaked, interest rates don't need to move higher, the next move is down.
Okay, hey, thanks Alex, really comprehensive presentation, so good coverage, thank you, and we'll look forward to seeing you again at the appropriate time. Thank you.
Thank you.
Okay, Council Committee, if we move on to the next agenda item, which is our committee draft work programme, item 7.1. So can I have a mover and seconder to that the report Audit and Risk Committee draft work programme be received? Mayor Tapsall. Oh, seconded by Councillor Maru, perhaps. Thomas, do you want to briefly give us an overview of the draft work programme?
Actions register? Sorry?
We're on the work programme. We'll move to the actions register in a minute. So just the work programme, and our discussion at the run sheet meeting is just need to show this as a live document confirming what's been completed and what's still to be completed, and there are some items that need updating on it, yeah?
Yep. So just what we'll do is with regards to the TVCs on when we're planning on doing that work going forward, but in particular there were a number of actions back in September and also in this meeting that we couldn't get to, and just showing therefore that they weren't undertaken this time and when we are planning to do them. So we will update this and reflect that, as you say, Chair, as a live document going forward.
Do we have any specific questions for Thomas? If not, I don't think I'd put it to the motion to accept the report. I had a mover and a seconder, but we'll move that we accept it. All those in favour, please say aye. Aye. Confirmed.
Aye. Sorry, but I
Thank
think just double check. Sorry, Mr. Chair. Was that the action register?
No,
or
we're
the
about
work
to move to the
programme?
action register now.
Oh,
Yep. So the next item is the action register. So a mover and seconder that the report actions register be received. Moved by Councillor Kaifong, seconded by Councillor Wang. Thomas, can you take us through that, please? Put that to the vote. All those in favour be accepted, please say aye. Aye. Take that as confirmed.
Aye.
So not really drawing anything to particular attention. So the governance team, during the discussion of the discussions and decisions that were made at the last audit and risk meeting and the one before that, are keeping a register of all the queries and additional information that has been requested or put into future agendas. And what you'll see there is the action, when it was requested and by who, whether it was supported, who's responsible for it, and whether that item actually has been completed or whether it's still outstanding. So within that, happy to answer any questions on any item that may be in there that you wish to follow up.
Thanks, Thomas. Can I get an update on my request that an internal audit program be funded in the long-term plan? A status update on that, please.
We haven't, as during our LTP discussions, haven't had an opportunity to raise that, but more than happy to raise that in the next workshops with regards to managing risk going forward and what an appropriate level of budget may be included into the plans going forward.
So can I just strongly advocate to the councillors who will make those decisions that, in my view, and I'll seek Stuart's view, that an organisation this size should have an internal audit budget, and we as a committee then would plan a program for effectively the areas that internal audit work would look at. Stuart?
Yeah, well, look, I'd certainly support that, in that it's it's often the most efficient and least costly a way of getting that second line governance coming, and it's about information between governance, management, and especially when one's dealing with significant projects, which this council has got some extremely material projects, and that whole interconnection works very, very well if you can put together an internal audit function, and as I say, it doesn't have to be an external person. It can be an internal, but it's about having a champion, and that framework then works. So I just support that. It's a really good initiative to have.
Thanks, Stuart. So the only other thing I was going to ask Audit is, one of the actions we had from the last meeting was, following the completion of the 23 annual report and audit, we'd have a post-review of the process, and we'll report that back to this committee with respect to future year appointments, so just so we don't lose that action. So that's an action sitting on myself and Thomas to follow that through. Are there any other questions on the action register? Yeah, Tatsuo?
Thank you, Mr. Chair. Through you, it was just in the key project section regarding the museum, and when Councillor Kaifong requested more regular reporting on the museum to the INE committee, which was supported by Chair Barker, and I see that the ongoing action was just that group managers were to discuss with Councillor Kaifong. Was there an update to either the INE chair or councillors in general? So just making sure that that's also not lost in providing more regular reporting, whether it was through a progress report at the committee or what.
Kia ora tātou, it is scheduled for the next committee meeting. We'll be giving an update.
Can I just ask that that update will include an update on the key risks and how the key risks are being managed? So if it's going to a separate committee, that's fine, but just confidence that there's a, okay, thank you, Nels.
Yes.
Okay, if there are no other questions, let's move now to item 7.3, which is the enterprise risk report. And can I have a mover and seconder that the enterprise risk report be received? Moved by Councillor Brown, seconded by Councillor Barker. All those in favour, please say aye. Aye. Confirmed. And invite Elron to present the report to us. Welcome.
Kia ora, thank you. I know we've just been over the actions from the previous meeting, and we've had some email dialogue around that. I just wanted to confirm with the committee exactly what the actions were from the enterprise risk side. That's okay, and just answer any additional questions you may have.
Yeah.
So in the last meeting, we reported that there were 2 additional risks identified, and I didn't have those to hand. These risks were contained within the report, and those have now been circulated. We've also adjusted our systems to ensure that any new risks identified will feature in future reports. So just apologies for that, and just a clarification as to what they were.
Elron, can I just ask a process thing? So if we take the top one, community safety, extreme risk, you've identified a number of mitigations, actions to reduce that risk to low risk. Most of them have got underway in brackets. Mm-hmm. From a process perspective, I'm assuming that it's not until they're actioned that the risk drops to low risk, that if the mitigations are underway but have only just started, how do you handle that from a reporting perspective, so that, and if actions are being delayed, you know, we might think, well, it's now low risk, but if the actions haven't been implemented, we've still got an extreme risk. So I just want to understand from a process perspective how you manage that.
Yeah, no, absolutely. So from a process perspective, just for the benefit of the committee, what we do is the PMO and risk team don't actually have editorial privileges. So the risks are presented to us by the business unit managers. We then review those and, you know, have any queries, provide additional support around mitigation, scoring, etc. if anything jumps out at us. So if you see in the far right-hand column, we always track we actually have an entire dashboard just on action plan status. And so the raw risk is the untreated risk, and the residual risk is the risk post-mitigation. So with that one in particular, what you would expect to see is that is probably at medium risk level, and this is why we ask that people indicate actually in the treatments which mitigations have actually already been executed. So we just routinely check that. We do have a quality assurance manager in the PMO, that works directly with the risk managers, and we have our own reporting on the platform. So I review that with the quality assurance manager every other week, and there will be detailed notes from a PMO perspective against a number of these risks, particularly the ones that are raw extreme and particularly those that aren't completed.
Okay, no, so from my, and maybe it's we can talk about when we have our risk workshop in the new year. I'm really keen, particularly for the strategic risks, that we as a committee understand the mitigations, how are they fully implemented or are they underway or at the start, so that we don't kid ourselves that we've got an extreme risk mitigations that haven't been put in place and say low risk, oh, it's low risk, we're fine, but it's, yeah, so that we have some visibility or you know, an understanding of the status of mitigations, to have confidence they're either in place, or if they're still being put in place, we understand what our current risk exposure is. But let's pick that up as a conversation, perhaps in the new year when we have our risk workshop.
Yep, absolutely, Chair. If I could just add to that, though, the one thing we do is once the mitigations have happened, we review the residual scoring based on our definitions for the risk types. So if you take this current period, the total number of risks hasn't moved, but some of the scoring has, and that's reflective of that process.
Thank you.
Yeah, so the next point, so the committee signalled that there were particular types of risks that they would like to kind of have deep dives in going forward. Those risks already exist, but they're nested into other broader risk categories. So we just wanted to identify, so on the left-hand column shows the particular areas of interest, and the right-hand, the lighter shaded column is where those categories of risks currently sit based on our existing framework settings, all with the exception of corporate health and safety, which sits aside from enterprise risk. So there's a corporate health and safety manager, and a separate report is produced specifically to corporate health and safety. The principal reason being is that there are a bunch of processes around that are independent of the risk, and that the risk settings around that are different as well. So one of the things that we wanted to ask is, in future, would you like to see a copy of that report, either circulated or on future agendas?
So maybe it's something we could discuss at the risk workshop, but from my perspective, I guess I was the one who raised that those items are listed there from my perspective are quite strategic things that we as a committee should have visibility on, particularly the mitigations, and if we have an ongoing program of a deep dive into one or two each time to understand the mitigations, that whilst they might be nested in other risks, it's something that I personally would be keen that we have visibility on, but take guidance from other committee members, and it could be a specific discussion, and we don't necessarily need to make a call now, but we could pick it up at our risk workshop, but happy to take other views or comments with respect to that. Stuart?
Chair, sorry folks. My apologies in that I got to read this just over the weekend and picked up a bit of a download in relation to the Enterprise Risk Register. So if I do ask a question that is inside the document, please bear with me. Do you have a definition or measurement in order for a risk to be considered extreme versus the varying categories? And are any of them monetary in the sense of thresholds?
Through you, Chair. Yes, Deputy Chair, we do. We have a detailed, quite comprehensive enterprise risk management framework that has previously been circulated, and I'd be happy to share that with you. It has all of our calculations and all of the assumptions that we have built into our current framework, and that's what we'll be hoping to review those settings with the committee in February. Yeah,
so that's the intent of the workshop, to have a really good look at that. So yeah, we can pick that up then.
Thank you. And just as a follow-on to that, and do you sometimes take a holistic helicopter top 10, top 20 risks that are often the focal point of committees like this, where it's really the ones that are keeping everyone up at night list?
Yes, yeah, absolutely. Oh, sorry, Chair.
Yep.
Yeah, absolutely. So what we have is there's quite a complex scoring matrix that underpins this, that's outlined in the framework. So what we have a view of is our top residual risks that show up on our risk management platform, and we. Again, we've previously reported those, so they haven't featured in this report because they haven't changed since the last reporting period. But I could give you an example.
Thank you.
Whoops. So this is what we would be looking at in terms of our current top residual risks. It's slightly easier to read, perhaps in upcoming committees and certainly in the workshop. I will show you the dashboards because they're dynamic to whichever data set you're looking at. So we can view by type, typology, category, appetite, volume, business unit or grouping, or any combination of those metrics.
Yep. So where you're going with the Stuart is that we as a committee and some of the thinking and identify the top 12, 15 or whatever it is. What are the key strategic things that we really want to have visibility? Yeah. And we have an ongoing program of maybe a deep dive into one or two to understand the mitigations and have confidence that those mitigations are in place. Yep.
Great. So for example, we would see something that would be glaringly obvious as an extreme risk because it might have more than $2 million impact on the balance sheet, a whole lot of other criteria. And it could be a project.
Absolutely.
And therefore it is coming to this committee, every committee meeting, to be focused on.
Currently, based on the program,
if there was, say, the top 10 or top 15, that would be something that this committee would be able to get a holistic guide, overview on in order to be able to understand what the risk is and then how it's being managed and an update to the management of it.
That's absolutely possible, yep.
Thank you very much. Apologies for the taking time.
No good.
Folks.
No, not at all. And just to clarify, that's what we do in our BAU. Yeah.
Councillor Brown.
Thank you, Chair, through you. What's the process for understanding WorkSafe prosecutions and the decisions through the courts that give you an idea of the risk that sit in that space? Are you assessing or ever reports coming from illegal beagles on decisions that may alter the risk as you understand it currently?
Yes. Thank you, Councillor. Yes, we do. It's important to understand the relationship between enterprise risk, corporate health and safety, operational risk, project risk, and the financial risks. What you've just outlined sits very firmly in our corporate health and safety, again, because they have different processes, systems, legislation around that. Those risks are captured at an enterprise level, particularly the key items that impact the council's reputation, legal position, and staff health and safety, or members, health and safety in general, including members of the public, but as an overarching umbrella view. So we would so the corporate risk manager would identify those risks effectively in that contained operational space, and then they would load the most relevant risks to their enterprise risk register.
Kieran?
So I think, as I understand it, and I'm a layman, but the decisions of the courts kind of move your assessment of the risk depending on the outcome of testing the legislation, if you like. And I think it's a relatively new piece of legislation, and we don't know where the decisions will land. But do you follow the decisions that then inform your assessment of the risk? Is what I'm saying.
Yes, we do. But again, a lot of that is contained in the business unit area, and then they lift the other ones, which is the level that we're presenting on here.
Okay.
But yes.
Okay, Ron. Yep.
So, Councillor Brown, that's more in Clint's area with regards to Jessie as Health and Safety Manager. So they're constantly being kept up to date with regards to legislative changes or outcomes with regards to investigations in court cases and making sure that that's wrapped up appropriately into our internal processes.
Sorry for you, Chair. Sorry again. I have this ready and available. So if you look at this slide here, this is just a visual representation of the different ring fence areas as a risk that we primarily look at. And again, because a lot, as you break it down, the framework settings are different, the information we capture is different, and there's certain specific areas of expertise. So the corporate health and safety sits aside our operational risk, and everything underneath that green box, the key risks that impact the entire organisation as a whole, are fed up. So that's just quite a useful graphic to demonstrate that. Again, I won't labour on it because we will be doing a workshop, but if you wanted to break out those individual risks, we've offered an example of what those additional categories could look like, and that information's in the report. So as I mentioned earlier, we've had no movement in terms of risks being closed or added, and we did support the development of the LTP risk register, which is again contained within our platform, but we've kept that separate because it's a project. But we've used the enterprise risk settings for the LTP risks that you will see later today. Once again, our risk mitigation seem to be working very well. We have no extreme risks. We have a significant reduction in high risk, and we're keeping everything at a manageable level. Even the residual risks, as you've seen, we don't really have any wicked problems in that regard. Some risks just will always be high, and we can really just try to impact the likelihood, but sometimes it's usually the severity that will keep those risks high. So if there are any questions on any of that? Or?
Are there any questions for Elron? So our action is to basically set a date to lock in the workshop in the new year? Yep.
Yes, Chair, my understanding is that's earmarked for a date in February.
Okay, cool. There's no other questions. Thanks, Elron. We'll look forward to catching up in detail at the workshop. Thank you very much.
Kia ora.
Okay, committee, the next item is 7.4, which is the changes to the council's... Sorry? My apologies. So we need to further resolve that the committee notes the information provided in this report. A mover, Mayor Tapsell, seconder, Mayor Councillor Barker. All those in favour, please say aye. Aye. Confirmed. Thank you. Aye. Thank you. Right. Jumping the gun. So the procurement policy, can I have a mover and a seconder that the report changes in the 2023 Rotorua Lakes Council procurement policy be received? Moved by Councillor Barker, seconded by Councillor Wang. All those in favour, please say aye. Aye. Confirmed. Aye. And so, David, we're in your hands.
Good afternoon, Mr. Chair. Good afternoon, elected members. So we have performed the triennial review of our procurement policy and made a few small changes this time around. I think the most important, the most fundamental change in the policy this time around has been a movement away from having one blanket set of rules across all projects or all spends, and having a little bit more focus and targeting towards the higher risk spends and projects. So in the previous policy, the approach to market was the requirements to approach the market were the same, basically from spends of about $2,500 upwards. And what we've done is we have recognised that a lot of that spend is very low risk, and we would prefer empowering our budget holders to put their time and energy into making sure that we're taking away the compliance from some of those low risk projects and putting the focus on those higher dollar value, higher risk, higher
Sorry, Robert, our procurement manager, was meant to present, but he's not here, so apologies. So I think, as David said, the review of the policy was to make it a little bit more enabling and focusing where the risks sit. So we have raised the thresholds. In doing so, it's removed a lot of the compliance cost off some of those smaller procurement items, and gives the organisation a little bit more flexibility. There's still rules around you may not need to have a procurement plan, but you have to go to preferred suppliers, etc., etc. But it is therefore targeting the energies in particular of the procurement team and the admin on some of the bigger items where the risk sits. In addition to that, there was a little bit more focus around, particularly around a bit of social procurement, and the team as well has been working with local entities, and also looking at procurement with regards to te aroa and opportunities for Māori-owned businesses, and we have been having workshops, and there's also, I think, a regional conference in our council chamber this week, or if not next week, where they're coming in and introducing them to suppliers, and so again, just a bit of a refocus with regards to using more local where it is appropriate to do so. So with that, happy to take any questions you may have.
Thanks, Thomas. So with the preferred supplier panel, is that mandated in the organisation for categories where you do have a preferred supplier that thou shalt use them, and the same with all the government contracts? So is that a compulsion to use those?
We prefer it to be mandatory, but unfortunately not all the time. Not all the time that takes place. There are times where it is appropriate to deviate from that. Yep. But so we've just recently gone for a retendering, I guess, of our majority of our preferred suppliers, and so obviously as those suppliers have gone to all that effort to apply, become compliant from health and safety and SHE, etc., that therefore that preference is always initially given to them. If they're not available in the first instance, then we will go elsewhere, but first port of call in the main is always to our preferred suppliers. Yeah, and does the procurement manager get visibility of that in terms of variations? Because my experience in this field is that if things are not mandated and there's really good reasons and efficiencies to have preferred supplier with all the government contracts, organisation can drift away. So is that something that the procurement manager has visibility where there's a variation? I note the policy allows for the person's manager to sign off a variation. Does that sign off feed through to the procurement manager so they can have some sense of the extent of variations happening? Yep, so in most cases a procurement plan still needs to be prepared. We're obviously talking about significant items, and in those instances the manager, but also the group manager and myself as CFO need to approve that procurement plan before that procurement can take place. And so within the procurement plan, the team member will give the detail as to why it is appropriate to deviate from the preferred supplier and go to a different supplier. So all that rationale is captured into the procurement plan, which is first for the big spends, but you know, yep, the 20, 30s, the 40s, the 50,000s, not necessarily. Oh, yep. So the other one is obviously our expenditure gets pre-approved for those smaller ones, and so if you are looking to pay someone and load them up as a new supplier, then the question starts with regards to the procurement team as to why we're using that supplier, why aren't you using them, etc., etc. Cool, yep, cool. And in terms of the table, in terms of contracts versus purchase order, is there sort of guidance in the organisation as to when a purchase order versus a contract's required? I.e. higher risk type of spend, it's more appropriate to have a contract than a short on a purchase order. Is there clarity around that? Probably not as well as it should be. Contracts is something that we're currently focusing on, so we have just done a stock take of our contracts register in particular and our commitments, and we'll be looking at implementing our new contracts module in One Council in March. Yeah. And so there is a drive between now and then around the training that you're talking about and the guidance and the capturing of that contract. So that is a bit of our process which we're looking to improve at the moment. Okay, cool. No, thank you. And just lastly, two other questions. One is around where there is a tender process, the evaluation. Are there guidance around price versus non-price attributes and things like where does
local or social procurement fit into that in terms of guidelines for how the organisation manages that?
The ability to weight the criteria around the other factors around buying locally or other social factors has been introduced this time around the policy. There is flexibility for the person preparing the tenderer as to what weighting that should be. It is treated on a case-by-case basis around price, quality and social, I guess, depending on the nature of the spend.
Sorry, did I misunderstand? So the procuring manager has a decision as to what weighting they can put to buy local or social in a tender?
Correct.
So there's no organisational guidelines or limits around that, so technically somebody could put 50% weighting on buy local?
They can, but just to remind the members as well that a procurement plan needs to be prepared. Within that, the weightings need to be there. The procurement manager talks to the team about what the appropriate weightings are, and the weightings also do need to be approved by either the group manager or myself as Chief Financial Officer before they can go out for procurement.
So that's the check and balance in place.
Yep, so we do have that mechanisms in place.
Thank you. Thank you. Any other questions from around the table? Yeah, Tapsel?
Thank you. It's just in regard, I'll just quickly find it, there we go, page 4 of the procurement policy and the application. So it's just in regards to point F that says procurement over $100,000 can be exempt by the CEO and over $350,000 by the CEO for specific circumstances. Just wondering what specific circumstances means.
Generally, it's where you have either a long-standing arrangement with a preferred supplier that has the expertise, which means you wouldn't go out for tender, because if you went out for tender and went through the process, you'll probably land on that preferred supplier with the agreed contract rates, and so that does give the organisation the ability to go directly where it is appropriate. It's pretty rare where that is applied, and so the $100,000 limit is for the Chief Executive to approve, and the $350,000 is above the officer's delegation, and therefore it is asking the Chair of the committee to approve with regards to that process.
That's not clear in the policies around the check. I actually had highlighted that as well, because that implies, the policy implies the CE can sign anything over 350. That's not...
No, that's definitely not the case. So as with regards to tender recommendations that fall above officers' delegations but below the requirement to go to council for $1 million, it would still require the Chief Executive and the Chair of the committee to approve that.
Okay, so maybe we just need to tweak the policy wording, how I've read it, yeah? Yep, thank you. Any other questions from the committee? If not, no thank you. So, Stuart?
Just in terms of public tenders, what's the broad time frame of, you know, and in the process of preparation to going out for a public tender, in terms of the preparation of the scoping document right through to the evaluation? Just very roughly, what are we looking at timing wise?
Obviously, as you know, it depends on the size and the scale.
Sure.
One of the ones in particular that's currently out to market is obviously the procurement of FOGO. So quite a lot of work went into the front end of that, understanding the procurement strategy, and when the pricing comes in, there'll probably be weeks of work with regards to the procurement team and picking apart the tenders and asking for pricing. So on large projects like when we did the Performing Arts Centre with regards to the contracts and the tenders, there can be up to 4 to 6 weeks of work after the fact, understanding the pricing, what's included, what's excluded, what's the risk around that and how to manage it, versus smaller ones which might just be it's still large, but a water renewal, for example, for a piece of work, where there's 3 local contractors that have replied. They're all pre-approved, and so the tender process the evaluation process can be a lot quicker unless there's tags. So generally where there's tags, it can take a lot longer, but if there's no tags, those can be turned around pretty quickly.
You want to jump in?
Thanks.
I think, Jeannie, you want to jump in?
Oh, no, I was just going to note, you didn't mention the use of external support during the procurement process, which I thought might be relevant to the question.
Oh, and if there's anything complicated or of significance, then we do, where appropriate, bring in the appropriate external provider to offer us assistance, particularly in more technical projects, but also in building and construction processes as well. So it's not uncommon, say in some of the infrastructure components, to bring in if it's a technical component, to bring in an external provider to assist in that evaluation.
Okay, if there's no other questions, thanks Thomas, thank you David. So, committee members, if we now move on to 7.5, so can I have a mover and a seconder that the report wastewater treatment plant project status report be received? Moved by Mayor Tapsell, seconded by Councillor Barker. All those in favour please say aye. Aye. Take that as approved. Aye. Welcome Stavros.
Good afternoon all. Thank you, Mr. Chair. We'll go through the order of the reports as in the agenda with the wastewater treatment plan. Before we start both for the treatment plant and the Rotorua scheme, Mr. Chair, I would take it as given that the committee is cognizant of the full spectrum of risks projects such as the treatment plant, the sewage reticulations, and the aim to mitigate. I just want to sort of, in brief, highlight that projects such as these are not discretionary projects in general. They are a response to regulatory compliance and freshwater standards, and obviously the appropriate resource consent conditions that apply to them. When we come to talk about sewage reticulation schemes, also it's quite important to note that one of the major risks is that in the absence of a reticulation scheme, the only viable alternative for maintenance zones is the application of the Bay of Plenty Regional Council Offset Plan, the management scheme. So septic tanks are no longer legal, and therefore reticulation schemes are in compliance with that. Also, would like to highlight that water quality, contaminants and pathogens, especially in the presence of our lakes, is a very significant community health concern by the Ministry of Health. The condition of lakes water quality is of deep importance to Te Aroha and all Mana Whenua. It affects the Council's many and varied land-related relationships with Mana Whenua with regards to securing access to water supplies, consents, discharge points, and so on. And therefore, that's a significant risk those projects are aiming to manage. And of course, finally, the lakes are of a brand significant for Rotorua Lakes Council. Lakes water health quality is a reputation risk to Rotorua's destination objectives. And therefore, all these projects, starting from the treatment plant and reticulation issues, aim in broad terms to address those kind of risks. But to go with your reports, with your sequence of reports, you have in front of you the wastewater treatment upgrade plan at the moment. We take the report as read, and more than happy to respond to any questions you may have on that. What I would like to very quickly emphasize is that the treatment plant upgrade is in response to the fact that we do have a resource consent currently that's expired, and we've got a time limitation of how much we can discharge into the forest, and therefore the upgrade of the treatment plant is paramount to meet that expiring resource consent and also our ability to discharge into the forest under the current conditions. The landowners of the forest, the CNI, requires us to be out of the forest by 2026 or to have a viable and practical alternative to that discharge point, and therefore the upgrade of the treatment plant is a pivotal point in necessitating and enabling that change of discharge from the forest to an alternative location. But in order to achieve that, we need to improve the capacity and the capability of the treatment plant to achieve nutrient limits that are embedded into the resource consents, and also to achieve a level of treatment that is consistent with their future development strategy, and also to enable the mana whenua who will be in control of the forest after 2042 to be comfortable that the discharge point is consistent with the cultural impact assessments. Ian Stapler, next to me, is responsible for managing the actual construction of the treatment plant upgrades. You have asked earlier the question, how long does the procurement process take place to get to that significant project like that? For the upgrade of the treatment plant, the procurement process started in 2018. It took about 2 years of due diligence for various interested parties to express interest and develop their proposals. And the council actually agreed to the upgrade of the treatment plan in 2022. So it's about 4 years process before the contract was awarded. Ian, do you want to sort of follow from your reports and respond to any questions with regards to the treatment plan to start with? Thank you.
Okay. Yeah. Tēnā koutou, ko Ian Stabler tōku ingoa. Yeah, the report, I think, you've got to draw a line in how much information you present there. The risk register, I think, has about 58 entries in it. So what we've done with the report is we've distilled it down into where the key areas of concern are that are affecting that particular project. So there's a lot of risks that all projects tend to carry, and this is looking at those things that make are really specific to the wastewater treatment plant itself, and also to the nature of the ground and the environment that it is within. So if we can take the report as read, then I'm happy to answer any questions you may have about the specifics.
Thank you. In terms of the financials, I'm right in understanding there's a $60 million budget. The fixed price contract with Trinity, I think I pronounced that right, is 58.7. So there's only effectively a 1.3 million gap, which is what you'd call your current contingency. Is that right?
That's correct.
That's right. But there are a number of areas where council is carrying the risk. So I guess where my question's going is, and just reading this report, it's really comprehensive, so thank you, but obviously it's a complicated, challenging project with a number of risks. And what confidence does management and therefore council have that the contingency or the budget is sufficient? And I know there's already a red flag item flagged where there's no budget provision. And so leading into the LTP, where is the confidence around potential increased project cost required with respect to the areas that council has exposure on, which some may be visible now, some may not appear until you get into the project? Because I'm right in saying construction is at a very early stage, early into the project, and it's not until you get right into the deep, dark part that you actually see some of the risks come to fruition. So, sorry, long-winded question.
Excuse me, Chair, just a question of clarification before the question is answered, and it's just around the question of discussing contingencies in a public forum.
Sure. So I'm happy, if it's appropriate, if there's commercial considerations to this discussion, to go into public excluded. It depends. I'll take guidance from staff on that.
I think the overall budgets allocating the council's long-term plan for the project is well understood at this point in time, and I think I will leave it at that. I think so. What you refer to as a float, or the contingency into that balance between the contracts and the total budget allocated. So we're comfortable that there's nothing There's nothing that is not really known in terms of our publications. However, in terms of your direct question of the risks associated with the projects and the potential need for additional budget into that, I think the response at this point in time is that we have a conduct that we've tried very hard over a period of 2 years at least to mitigate those kind of risks as best as we can. And we will try to operate within that reserve, in the overall budget. Our expectation is that, in the event that contractually the project may require additional funding, that decision will be, presented to the council in due course, to make that decision. The balance, of course, is how much you allow into an overall program of works to accommodate any possible contingency. And we have made the decision that the budget allocated over the project, should be enough to accommodate those, those kind of risks. But as you said, if there are additional risks that we cannot overcome through contractual mitigations, then obviously that's a decision that we bring back to the council in due course.
But you would agree that this is quite a challenging, complicated project at its very early stages?
Well, yes, it is a challenging and complicated project. However, having due regard to what I've noted earlier, that is a project that has been offering for about 4 years, and a significant body of work has been undertaken to define the project as well understood by the contractor, and the contractor have engaged into that. We would expect some risks to be associated with the ground conditions, which are at the moment are in the early stages of the project. But above ground conditions, we expect very little risk because the contractor has accepted the fixed term of that, this fixed part of that contract. So the majority of the risk we are facing is in these early stages where we identify contaminated material or material that could not have been foreseeable because the area was an old landfill in that area. But above ground construction, which comprises the 80% of the works, we don't expect to see, to find an unidentified risk yet.
Other questions from around the table? Stuart?
Through the chair, thanks very much. Hi, Stavros. I'm a little new on this, but I was interested to know, have there been any generic kind of precedents for this particular wastewater upgrade that have happened either in New Zealand or in Australia? Generic being that I know that Rotorua, of course, is its own unique geology, and you've got your own unique circumstances around it. But in the broadest terms, the upgrade that you're considering, has it been done by other councils in the last 5-10 years that you're sort of seeing what your experts are telling you and what you know yourself in terms of being engineers? Is this thing really new? Is this new, or have we got something to look at to say, yeah, look, that's been done, little different circumstances, but on the whole, it's giving comfort in terms of abilities to achieve the objectives?
I think there are two parts to your question. Obviously, there are 67 territorial local authorities, and they operate a significant number of wastewater treatment plants. And obviously, there's a plethora of information about different types of treatment and treatment plants.
Yep.
Actually, our upgrade of treatment plant is a lower end of investment than many other cases. In recent times, if you look into cases like Palmerston North, we're looking into close to $500 million upgrades. And Wellington, talking about in the $400 million.
Yep.
In Cambridge, recently $120 million. The approach we have taken here is that we're not building a brand new plant. We are building on the existing plant. We are upgrading these treatment processes and some of these detention and flow balancing processes and its treatment capacity to the level that the thing is appropriate to meet our resource concerns and their future demand for the scheme. The existing treatment plant is situated in a location that's been there for about 35 to 40 years. So the conditions on the surface are well understood and the demands of the treatment plant are quite well understood. The process we have undertaken to go through the procurement process, as I said, since 2018, invited 6 large entities to provide design and building opportunities. And as part of that process, a whole range of treatment or upgrades were explored. And we've used external peer reviewers too, who give us additional technical advice to our own knowledge. So in reported years, there is a significant body of evidence and information related to treatment plant processes across the country. We continue to use our technical support staff from other agencies to assist in that respect. And we expect that we have a well-covered anticipation and understanding of what we need to achieve at the end of the day. Sorry.
Thank you. Follow on, if I
sure,
might, just, Chair. I asked the question kind of in the context of the start of the process was 2018, and as you say, it took 4 years to get to where we are now. And it's not a new treatment plant design and build. It's a as you say, it's an upgrade to an existing. So I'm just curious as to what was that a long period of time? I mean, is that unusual, 4 years for that kind of project, or is it just so fraught with difficulties, engineering difficulties, that it took so long to get to this point? I'm trying to understand the risks by the nature of the project itself. It's different. It doesn't have precedence, or it does. That's the kind of. I'm trying to get a feeling from you folk, because you're the engineer, so you understand the technical elements of these things far more than I could. But it's to get a sense of what could be looming problems in the future that we need to think about from a contingency perspective.
Thank you. I think just to elaborate a little bit about the length of the procurement process, the initial upgrade proposal contained an element where the forests landowners required the council to vacate, move out of the forest.
Right.
And the proposal was developed initially to do the full treatment at the location of the treatment plant, and instead of pumping treated effluent to the forest, to discharge near the lake, the sulfur point. I'm not sure if you're familiar with the sulfur point. That process was developed to its maximum potential, and by 2020, we were ready to go to the environment courts to seek a resource consent to discharge near the lake. Subsequent to that, a number of Mana Whenua Hapu expressed a resistance to that for cultural impact perspectives, and that environment court application was withdrawn. So from early 2021, the process asked the question again. We know the treatment of the treatment plants, the process. Now we have to explore the possibility of discharging somewhere else instead of near the lake next to the treatment plant. And we went through a process of asking the question with regards to the various components of the treatment plant. Would it still be relevant to discharge away from the treatment plant or near the treatment plant? And we have asked the participating tenderers to go and revisit their design and identify technical implications for that perspective. Nothing major been identified that it could not be overcome, and therefore the fundamental design process has not changed, but it's changed some of our approaches to securing a final discharge point for the treatment plant. And we are at the moment engaged with Manawhenua and various hapu to identify that location, and that will inform the next phase, of the transmission, component. Would not change the treatment plant upgrade itself. It will change the location where we're discharging. We don't know the answer to that yet, but we'll continue to work with them, and that will be something that's going to be additional to the upgrade of the treatment plant cost, which we're not entirely sure at this point in time the exact location where it's going to be.
Councillor Barker.
Actually, it's sort of rolled into the question that I was going to ask. On page 47, it says that the final effluent system pumps may need to be upgraded because of the sustainable forest approach that is going to be taken, and that this won't be known until further into this process of figuring out what that approach will be. But it's and so this cost will be additional to that that's already been acknowledged in the report. Is that correct? You just said that, didn't you? If I got it right.
Yes, that's correct. So the existing pump system is designed to carry that wastewater up into the forest to some holding ponds there, where it's then used to irrigate the forest for further nutrient removal. That pump station, any upgrade to that, or indeed a change of it, just completely depends on whereabouts the situation of the solution is going to be. You don't need those sorts of pumps to pump treated wastewater across a flat piece of ground to a disposal point there. So if we were to spend money on upgrading those pumps so that they can carry significantly greater volumes that will match the ultimate capacity of the upgrade, then we would need to dramatically increase those pumps substantially to lift that water up to its current discharge point. We would just be wasting our money at that point without knowing where we're going to end up.
Okay, so that cost is unknown, and it says that this risk is being managed. Can you explain how that risk is being managed? So
the risk is being managed while the conversations are going on. I guess the largest aspect of that is that we have a process plant there that is going to be designed to process over a maximum of 24 hours. It's just over 1,100 litres per second. Those effluent pumps that we have at the moment can lift between about 500 and 600. So that does place a constraint, not necessarily on current day operations, but it places a constraint on the contractor's ability to fully commission the plant up to those flow rates. So there are different ways of approaching that, and they can certainly design a commissioning and test plan that will allow them to test the important things, but they may not get the opportunity to operate the plant at that final capacity over an extended period of time.
Understood, thank you. And with the sustainable forest approach, are there any, how's that process going, and are we on track? Are there any risks associated around that we should be aware of?
Yeah, as I said earlier, the CNI, which is the Central and North Island EUE trust that manages the forest at this point in time, they have asked us to move out of the forest. We're utilizing 440 hectares of the forest land for irrigation, and they would like us to be out of the, that process. In order to do that, we cannot no longer rely on the irrigation or the filtration of the land, and therefore we have to do all the treatment on the plant to achieve the nutrient levels and the pathogen destruction that is required to meet that requirement. We are talking to the Manawhenua who will inherit the land from CNI after 2042. A number of long list sites have been identified to the south, near Himo and Wapa, and on the upper streams of the Puarenga stream. Those gradually have been shortlisted to 3 sites, and at this point in time we are identifying the preferred site, and would expect over the next 6 months that will be concluded. Probably is going to be in a form of wetland discharge to allow the water to be making contact with the land before it's allowed to get back into the Waringa stream again. I think as Ian was saying, that's a significant importance because knowing where that discharge point is going to be, it will dictate the rate and the size of the pumping to that level. You would have to appreciate that if you are pumping now at next volume of treated effluent into 440 hectares of land for irrigation, and we no longer the irrigation, there's no point of duplicating that capacity. We have to design it in a way that will address a single point of discharge. And that's where we're working with Manafeno from a long list to a short list, and we are quite confident that we'll find that place over the next few months.
Thank you.
Thank you. Just in terms of cost escalations, it's given a number of years to land the contract, during which time inflation has taken off. Where does the risk on cost escalation sit?
The contracts made allowances in this total of 5.3, 5.7. Yeah, the total contract is $5.7 million, but when you go into the schedule of the contract escalations are covered as a lump sum within the term of the contract. So the contractor is not expected to apply for additional cost escalations.
And that does take into account the inflation rates that we're currently facing, so management are confident that existing cost increases which were experienced over the last 2 years since the land of the contract, they can be accommodated in with that lump sum figure?
Yes, Mr. Chair, when the contract was initially submitted in 2018, the proposal for the contracts, it had a price envelope onto that because we had the delays for the next 2-3 years. Before we enter into this final contract, we have asked the contractor to price and amend their price for that intervening period and for the period of construction. And the contract price includes a fixed range where the contractor, would the foreseeable or breaching or suppose hedging, the CPI escalations, and they will not be allowed to claim for more than what they have priced in the contract already.
Okay. So, councillors, if we had an internal audit budget, this would be the type of project I'd suggest that we have a review of the project management and contract processes to give us assurance that they're being diligently applied. I'm sure. And so given that we don't have an internal budget, my suggestion to the committee would be that we utilise the PMO to undertake a review for us, just to give us confidence that the organisation's project management and risk management practices are being fully applied to what is a high value and complicated, challenging project. So I just sort of seek guidance that we support for that sort of review to be undertaken and report back to this committee. And so, yeah, Tapsell?
Yes, and thank you for putting consideration into this very significant item. I'd certainly support that at this stage, and then if there were any issues or risks that were to come to light as part of that, then further consideration of what could happen there, but would certainly support the capability that we do have within the PMO office, adding support there as well.
Okay, so do we need a motion to support that, or we just add that to the action register? Just add it to the action register. I think there's clarity around that. Before we move off this contract this project to the next project, is there any other questions? Councillor Brown.
Thank you, Mr. Chair, through you. There's 3 options, Stavros, in terms of the discharge. Did you allow for additional cost associated with those 3 options, or is that something that we will expect new charges for?
The Councillor Brown, sorry, I was going to call you something else. Councillor Brown, yes, our LTP long-term plan, it's got a separate component for the discharge options into the forests, and then that depends on the location. So you will find that the LTP that we're making a provision for that.
Okay, if there's no other questions, we'll just move that the committee notes the risk identification and risk management approach being used in the execution of the WWT upgrade project. Can I have a mover and a seconder for that? Moved by Mayor Tapsell, seconded by Councillor Barker. All those in favour, please say aye. Aye. Okay, confirmed. We move to 7.6, which is the Rotorua Sewage Reticulation Scheme project. We need a mover and a seconder that the report be received. Moved by Councillor Barker, seconded by Councillor Brown. All those in favour, please say aye. Aye, thank you.
Thank you, Mr. Chair. Thank you, Mr. Chair. There is, the committee would know that I provided an extensive report back on 20th of September with regards to the Rotorua scheme, which outlined the history in more detail, and especially with regards to the connection of the Rotorua scheme to the DEET-funded targeted lakes programs of since 2005. And I will go in summary, again in this presentation, again for the benefit of new members of the committee, and perhaps just to clarify if any additional points that may need to be clarified. Again, the strategic goals for that project has been, as I said earlier, is part one of many reticulations that's been undertaken since 2005. The imperatives behind those reticulations were the Bay of Plenty Regional Council's management zone and offset plan, which required all communities around the lakes, especially the targeted lakes, to cease to use septic tanks and to either apply the offset plan or to engage into reticulation projects. Council, since 2005, identified a number of reticulation schemes, and about 2,500 properties have been reticulated since then. And the overall objective here, which is consistent with the Ministry of Health indications, we are removing somewhere in the region of 2.5 million litres of untreated sewage from entering the lakes into the environment. For this project, personally, I'm a bit of a latecomer. I came in 2018 to look after this project after resource concerns and various agreements have been concluded. But I do have developed a significant understanding of the background to that, and therefore I think it's quite important to walk you through that. The reticulations completed today around Rotorua, Okareka, West Rotoiti, Rotoma is the final stage of the various programs of works. The Council has agreed to complete all these programs in a DEET funding agreement with the Ministry of the Environment and our partners in the Rotorua Lakes Strategic Group. And obviously going through for that period of time, when you look into individual scheme costs, pressures and configurations, they vary from time to time because there are local issues, and obviously the time inflation related matters are also quite impacting onto that. When you look into the time frame in the early 2005 to 2012, for example, CCPIs were very low, consent conditions were different, environmental standards were different, and obviously as we move closer to the present time, those pressures are changing and impacting the costs of those projects. Now, this is the Rotoma sewage reticulation scheme. If you just from to my right is the Lake Rotoma, which got a community of about 220 properties, and the red line connecting to the treatment plant represents about 47 kilometers of high pressure mains that takes wastewater from Rotoma through land all the way to the green dot, where is the wastewater treatment plant in Rotoiti, and extends to the west all the way to Curtis Street, and covers in total about 650 properties, and includes 3 major pump stations to connect all the rising mains into the treatment plant process. So it is an extensive scheme. It's got a very long history. And more importantly, is situated near very sensitive waters and very sensitive cultural grounds, and that's one of the reasons why some of this scheme had some extended history behind it. Now, this is a treatment plant constructed on that green dot. It's got the same technical configuration as the upgrade of the treatment plant for the city. It's membrane bioreactor. It receives all the wastewater from all the 650 properties. The big difference here is that every one of the properties in this catchment has a pre-treatment system located on its side. For the Rotoma, a step system was used from EcoFlow. For the East Rotorua biolytics vermicomposting system has been agreed, to be and required for the resource consent to be implemented. So therefore, we got the primary, secondary treatment on each individual property, and the tertiary treatment takes place at the treatment plant, and the discharge configurations are very high standards. For example, is required to contain no more than 5 E. coli parts per million, which is in the last 2 years we've been operating, or 18 months we've been operating that, we actually operate to 0, which is basically close to drinking water standards. And also we have an extensive way of monitoring emerging organic contaminants, which you don't have anywhere else. And obviously the rising mains that connect each individual property and the sub-mains that collect effluent are tested regularly, and especially where they are crossing sensitive water streams, cultural significant grounds, and that enables the project to give confidence to Mana Whenua and the Ngāti Pīkeo society in that area, that is the Mana Whenua in that area, that their cultural requirements embedded in the resource consent have been appropriately and consistently met. Again, a very brief history of the schemes there. Starting in 2005, in 2012, an attempt was made and went to the Environment Courts, and the Environment Court rejected that initial proposal on the basis that it was inadequate consultation and engagement process with Mana Whenua, and therefore a significant amount of aborted legal and planning costs took place in 2012. The unfortunate fact of that abortive scheme was that a significant deficit of trust was created between the council and the local communities. And in 2014, the scheme started again with a proposal to bring together Rotorua and Rotoiti and jointly connect them to one single treatment plant. The scheme at that point in time, as proposed to the council, agreed by the council, was based on grinder pumps and not pre-treatment systems. But of course, the resource consent, during the resource consent applications and granting in 2017 and 2018, the consent stipulated that on the instigation and the expectation of Mana Whenua that grinder pumps were not acceptable, and that every household should be provided with a pre-treatment system in the form of a minimum of step, but preferably vermicomposting to address their cultural expectations and objectives for those lakes. And since then, a number of phases of the contract for the construction of the Rotorua scheme part first, and then the treatment plan, and then connecting the treatment plan has been undertaken. And we are right now at a phase where by next month in December, about 80% of the scheme property installation will be completed. The treatment plan has been operating, and over the next 6 months during the LTP, the Rotorua Lakes Council has to consider what the targeted rates will be for the receiving properties or benefiting properties. Now, a very brief outline of initial cost. In 2014, the scheme concept estimate was about $35 million, and of course that contained, as part of that report, a 30% uncertainty because no detailed design has been undertaken at that point in time, and no resource consents were secured. As the scheme has progressed to resource consent and the various expectations of the resource consent conditions were articulated and converted into design and compliance regimes, for example, moving away from grinder pumps towards biolytics or vermicomposting pre-treatment systems, extending the scheme to Curtis Street with another 6 kilometers of mains to the west, and the extensive involvement of legal planning and giving effect to the cultural management plan have changed the cost configuration of the scheme. as of today, as of writing that report a few days ago, the actual cost increase is about $47.3 million, but it's projected to be somewhere between 55 and 56 to the end of the project. And you can see there the various components. The treatment plan has changes. You know, they incorporate the higher UV treatments, and the land lease agreement requires to undertake and provide utilities for future papakainga housing in the area. Rotorua had different challenges. One of the major cost changes at this point in time, you will notice is the East Rotorua on-property price differences. If you exclude the price difference between grinder pumps and biolytics vermicomposting systems, one of the other elements of cost changes in the last 2 years is that the extremely high lake levels. When the design was undertaken, it was estimated that some 10% of the properties in East Rotorua would require to have some kind of dewatering devices to be installed. But of course, for the last 2 years, with Lake Rotorua, Rotorua and Rotorua being at such high levels, that were the highest since 1971, I believe, about 60% of the properties require extensive dewatering, concrete balancing, and many times the plastic containers for biolytics would float without concrete balancing behind us. So it increased a significant amount of those costs in that respect there too.
Excuse me, Steve, just in terms of the East Rotorua, the cost to complete that 7.6 million still to go. We've spent 7.2, there's 7.6 to go, yeah, so we're halfway through. What's to go, the cost confidence around that 7.6 million, is it the most difficult properties are left, or it's just a sequencing? So I guess the number of my question is, what's the cost confidence around the 7.6 million?
Yeah, it's a bit, it's a significant chunk of work still to be done. The parts that remain to be completed are difficult for 2 reasons. One is that by December we would have completed about 330 properties, and we would leave about 100 properties. Unfortunately, these are all multi-owner Maori whenua lands that require significant engagement to find the owners, of that, get consent. And it's difficult from the legal perspective to get the permissions to do that. At the same time, because there are legal disagreements about where the main conveyance pipes will go, on whose property will that go, that presents a challenge in actually accurately predicting the location of these kind of pipelines. But in terms of cost, the overall cost, we're fairly confident that that level is, is pretty, it's anticipated to be in the rough water where it needs to be done. We also got in there the installation of marae treatment facilities. The resource consent conditions and the land iwi agreements earlier have agreed the installation of marae facilities will be done at no capital cost to the marae committees. The cost will be borne and shared by the rest of the community. But we do have some extensive discussions at the moment with the various marae committees as to what is the treatment facility they require. There are 2 schools of thoughts. One is that they will require the treatment facility to be at the peak demand, so when they have super events, as some others would like to see them at the lower level. So that reflects a significant challenge to identify if we're going to install a capacity in those marae that would be ready to accommodate a super event, a super tangi, or other sort of community facilities and events, then obviously we'll need most of this, most of this budget, to accommodate it. And that requirement is embedded into the resource consent requirements to comply with it. These are the 2 challenges: identifying the location of the mains into multiple Maori whenua lands, and sort out of the marae requirements or what kind of treatment capacity is required. Okay,
but taking into account those challenges, you're confident that the budget left is sufficient? Thank you.
Yes. Again, the core schemes of funding matters, I think the previous reports, went through that in the whole process. And one of the issues, the challenging issues for the community down there is that initially the the funding allocation from the deed funding, it was only designed to be around the initial estimates, and that was underfunding the whole scheme. And we believe that the Minister has an obligation under the Crown deed funding to fund at least 50% of the East Rotoiti. On the Rotorua scheme, the funding, subsidy funding was received by the Ministry of Health because, as I have outlined earlier, the Ministry of Health is very concerned about the health effects on communities who take water from the lake for drinking purposes, and they gave some funding in that respect there too. So the net funding that we are required from the Minister is to increase from $11.5 million to $21.5 million to reflect 50% of what was the estimate, or was the actual cost for East Rotoiti. Her Worship the Mayor and ourselves are working with we did try to work with the previous Minister, but it was not very productive outcome at that point in time, but we'll continue to work with the new government to secure that kind of funding. These are challenges. Again, moving forward, these are the cost pressures, high lake levels, Whenua Marae systems. As I said earlier, the risk is that the possible growth would be in the order of $56 million. And without Crown funds, that will put a significant, it would be a significant impact onto local property owners. We continue to work with our partners in the strategy group, and the LTP will start consider any funding plan costs for the 24-34 targeted rates, and obviously we will, elected members will review what kind of targeted rate they want to impose to recover the net cost of the scheme. And I think you have asked, Mr. Chair, you have asked a couple of areas to identify, knowing what we know now, what we would do different, or could we do different in the future? And my opinion, and again, reading the story, the history of this project, which is one of many projects in that evolution of reticulation schemes, is that when we're scoping and setting budgets, the initial estimates we tend to use them as a budgets. But you have asked this question earlier, is that those estimates need to perhaps continue to be evolved as information gets better, as we progress forward. At the same, one of the options, of course, is not to progress with the whole project until a detailed feasibility has been assessed, full design has been committed, and an accurate estimate of the cost have been constructed instead of an estimate. That's the lens of our future projects, perhaps. External funds, again, as I have noted in my previous reports, the interactions with the Ministry of the Environment and the Minister, and unfortunately with some of our partners, became a little bit ambiguous as to what the council was entitled to receive as a subsidy. And again, we collectively should try to make sure that we have security of all external funding, including any variation scope and methodologies to agree with that variation before we actually commit to this kind of projects. I know it's challenging because sometimes you had pressures. For example, for Rotorua, the Ministry of Health contribution of $4.5 million for Rotorua suddenly became at risk because the Ministry of Health said they have allocated that money since 2012, and because the project was aborted in the Environment Court, in 2017-2018 said, well, if you don't use it, you lose it. And suddenly you face a pressure to progress with the project when you don't have the full detail in front of you at that point in time. But perhaps in the future we should change the way we approach that process. Another option or another element where I think this project should highlight, and we are applying it at the moment with a new reticulation scheme in Tarawera community. As you go through phases, I think it's quite important for the community to be brought up to speed of each individual phase and to be fully informed about the challenges for each component, the certainties and the uncertainties for each phase. So I think in rough order, these are the areas that I would focus attention as learnings for the future. And I think we should, and we are, as I said, we are already trying to apply that in the Tarawera reticulation scheme. and we hope that we can have a better outcome in that respect, or with less uncertainties, I hope. Thank you very much.
Thanks, Stavros. Can I ask, particularly with respect to that first learning for the LTP, that learning is being applied to your new LTP capital projects, particularly ones which are not standard projects. So you've got strong confidence around the costs, roading, et cetera, that, that you'll have projects which you have confidence, you have projects with high degree of uncertainty that you're, I guess, applying, or my question is how are those learnings being applied to those projects where there is significant uncertainty, significant challenges, et cetera, and how council will deal with that through the LTP process?
I think there are two parts to that, to my answer to that. Is that one is that you've got capital works relating to renewing your existing infrastructure, and you can play within an envelope of renewals. Sometimes your priorities change, and instead of doing X number of renewals, you might do slightly less because your funding and your cost drivers are changing. When you have a brand new project, and especially a project that will involve a capital funding plan under the council's funding and revenue policy that requires the benefiting community to contribute to that, either in full or in parts. And I think what we are trying to do at the moment is actually to do it in a phased approach and update our estimates and our certainty about this cost, and inform the communities as we go along with that. And I think we are learning from it and moving that direction. Of course, the LTP, especially an infrastructure strategy, where we're required to address a 30-year horizon, it's pretty difficult to actually be accurate now what your actual cost would be in 10 years' time or in 15 years' time. So, but again, the benefit of the 3-year cycles of LTP should give us an opportunity to refresh, update, and revise our decisions to proceed or not to proceed with that kind of project.
Okay, thank you. Do we have any other questions around the table? If not, we'll move to the recommendation that the committee notes the wider context of the deed-funded wastewater reticulation programs and the current status of the RRSS project and the actions taken by council to address scheme delivery and funding risks, as well as issues and recommendations arising from the implementation of the scheme. Can I have a mover? Councillor Wang, and a seconder? Stuart Henderson, thank you. Put that to the vote. All those in favour, please say aye. Aye. Taken as approved. Thanks, Stavros. Thank you. Councillors, we move to item 7.7, which is the long-term plan project. So we have a report in our papers, and we had circulated separately the detailed risk register. I'll ask for a move and a second that the report long-term plan 2024 to 2023 process and progress report be received. Moved by Councillor Waru, seconded by Councillor Barker. Thank you. Put that to the vote. All those in favour, please say aye. Aye, taken as approved. Who's talking to this? Una.
Thank you. Through you, Chair. Apologies from Greg. He is off sick today. He has prepared this report, which is now the second report coming to the Audit and Risk Committee in regard of the LTP and the risks associated with this quite significant project piece of work for the council. I will take the report as read and happy to answer any questions, mainly in I guess the differences that may appear from the reporting here versus the previous report presented to you. Thank you.
Suna. So just a question from me, just in terms of the state of the infrastructure and financial strategies, and also the key assumptions, just in terms of where they're at and confidence that those key building blocks are well set.
Through you, Chair. So the infrastructure strategy is in draft form, and that has been put forward to the council. The council are now reviewing every piece of work identified in the infrastructure strategy, and that was off the back end of the workshop that was held on the 21st of November. The financial strategy is under review and subject to the final decisions that Council or Council direction that will be being provided to us. We have a number of workshops still scheduled. We have another one on the 5th of December and then the 13th of December, and those two workshops are to continue to fine-tune what the work program is, and the results of that will finalise what the financial strategy will look like. The significant forecasting assumptions are also well under review and are being updated. Those will be provided to the councillors as a full set in draft form as part of their Christmas reading pack, which is intended to be sent out to councillors just after either on or just after the last workshop on the 13th of December, and then we will look to adopt those significant forecasting assumptions, financial strategy, infrastructure strategy, and a number of other policies early in the new year, so that they are either in the process of being adopted or have been prior to Audit coming on site in early February to start the audit process of the LTP and the consultation document.
Thank you. And can I just ask, in terms of the infrastructure strategy, climate change, that the infrastructure strategy clearly articulates Council's view on the medium to long-term impact of climate change on its assets?
I will defer over to Stavros there. He can give the detail on that one.
Thank you.
Yes, Mr. Chair, the to our infrastructure strategy, every scope of capacity enhancement uses the climate model, predictions we have. And of course that calculates rainfall, calculates demand of on treatment facilities and water supplies. So everything in the infrastructure strategy works with the Bay of Plenty Regional Council's climate modelling predictions and informs the approaches we need to take from it.
Thanks, Stavros. And just in terms of time delay audit engagement, where are we at with our audit friends with respect to our timetable, where we're at, and engagement with them, and an understanding of where their particular priorities and focus might be in the audit, in terms of the audit process?
Through you, Chair, we have had early engagement with the auditors, so they're well aware of our timeline. We are anticipating, and I can't remember the exact date that we've got them coming into the office. I do know it is early February. We usually spend, past LTPs have been up to a month to undertake that audit process, and I might just look over at Thomas to see whether he wishes to add any more detail to that.
He doesn't need to. That's fine. That's fine. The key is there's been engagement, and we're aligned with audit, and particularly that we've had early discussions with them as to where their particularly priorities of audit focus are, so that we know what's coming up the lift from them.
No, we haven't had any engagement with the auditors on the detail. I think the auditors in Audit New Zealand in particular are still facing some resourcing challenges in closing out their annual report cycles, and there were indications from other councils that they may be looking to start a little bit later in February than early. So we are unfortunately a little bit of a wait and watch this space, but we do anticipate them to start on time as they've indicated.
So just encourage, if you can, to meet early, particularly the areas of audit focus, that you've got a good understanding of that, and the priorities that have coming down from the Office of the Auditor General, so that just we know what's coming up the lift from audit is important. Yeah. Yep, and as I guess as well as we are seeking updated guidance from the DIA in particular as to the pathway forward on Three Waters. So hopefully now that the government has been formed, we'll look forward to that guidance as soon as possible. Okay, do we have...
Through the Chair, just to add a bit of clarification from what I've been hearing through Council and also through Central and DIA and Audit Office, the LTP is giving Audit New Zealand a significant headache, and I do not believe that they're going to be able to do it in the time frame that is set out legislatively. And there is a push to extend the LTP by 3 months, which unfortunately from Audit New Zealand's perspective is not much fun either, because all that means is that they're going to be shifting it into an area that they currently do most of the government and department audits. So there's a real constraint issue going on. DIA, I believe, are looking to extend it to 3 months to 30 September in terms of having the LTP extended to that point. And as I say, against that, the Office of the Auditor General is having real capacity issues. So it's I've had one council that's already actually pushed their LTP out to 30 September. They've made a decision that is what they're going to do. And that was just passed by their council very recently.
From our perspective, we're working to the statutory timeframes. We expect that there will be some changes through the incoming government and the legislative reforms. We're anticipating that. We're confident that we can continue to meet the existing timeframes. We're certainly not seeking an extension, and we're not convinced that an extension would assist us in the long run because of all of the knock-on consequences for rating and the impact that that would have on our ratepayers.
And that's very much a view that is coming from council, but the issue is that the faces that they're not going to have an Audit New Zealand sign off of their draft in order to go to public in time. And it's a case of if they can't have that, how will they do it? Just to give you that it's not your team's problem, it's the problem is with Audit New Zealand.
Okay, so this is just a bit of a watch this space in terms of how it evolves. Okay, are there any other, Mayor Tapsell?
Thank you. It's actually quite timely that you raised that, Stuart, because given Western Bay of Plenty Council's decision to delay and some calls from other councils around the country, I know certainly in discussions within the sector, it would be the desire for local government to be given leniency, but I just wonder how seriously it had been taken into account on whether that was possible. Needed to, would it be possible to delay? I just ask this as a potential option if required, given the significant challenge of what we heard last week, a 14% rates increase. There may just be additional time that the decision makers want to spend on it.
Even without the reforms, it's technically possible to produce a late LTP, and we have seen that with other councils in previous years that they have produced their LTP late. The practical consequence of that, though, is that it does create a cash flow problem for councils, because you have to strike your rate based off the current year of your LTP, of your existing LTP. So that means your first instalment will be a very low instalment. When you do approve your final LTP, that means any increase has to then be spread out over 3 instalments. So the consequence for the ratepayers is pretty serious, and that's something that we would seek to avoid, because you'd have an artificially low first instalment and then a very high second, third and fourth instalment. So for that reason, our strong preference would be to meet the existing statutory timeframes. But yes, even under the current law, it is possible, and other councils have failed to meet the timeframes. But it's just that the consequences of that are pretty serious for ratepayers.
Thank you. I did have another question as well. It's just regarding the timing. I appreciate that there is a significant amount of writing involved, but if the time frame isn't very long from when the council makes a final decision of what should go into the consultation document. Is the consultation document for the information that we do know currently being drafted, or is work currently being undertaken that could be prior, understanding that some items, the variables will come later once the council has decided, but there will be information that could currently be being prepared? I'm just wondering if that would be proactive.
Through you, Chair. I guess the simple answer to that is yes. So an outline for the consultation document follows the checklist, or there is a checklist that is provided to councils around the requirements of what is legislated for a CD. What we have been doing is ghosting, for want of a better word, behind the council in your workshops. And so as those workshops progress in a direction or tack one way or another, that outline is being fine-tuned. The idea and the premise behind that is that come the 13th, when we are seeking pretty much a final direction from the council as to what your 10-year work program will look like in terms of a conversation to have with your community, we have sufficient guidance from the council to complete and then fully put together the consultation document in time for the audit commencing in February. So it's a bit of a dual process. While the council are workshopping, we are starting and have started work on the outline. That outline in itself has already morphed a couple of times, given that the council workshop and the issues and the challenges that you are discussing have also morphed and get more sophisticated as the process goes through. So that's where we're up to.
Are there any other questions for Unurua? If not, we'll move. I propose a motion that the committee notes the risks and mitigations contained in the risk register and endorses the mitigations of these risks as per the risk register. Can I have a mover? Councillor Kaifong, seconded by Councillor Wang. All those in favour, please say aye. Aye, we'll take it as approved. Resolution that we now the council move into public excluded. A mover and seconder. Moved by Councillor Kaifong, seconded by Councillor Wang. All those in favour, please say aye. Aye, we'll take that as approved. So item 10.1.